Hello there, this is binaryoptions.com, and we are looking at the euro, GBP and pound here on the daily chart. As from my point of view, the pair is forming a bullish formation, or a bullish pattern if you want not to repeat the words. A bullish pattern that should break, of course, to the upside. The bullish pattern here is being called a falling wedge. Let me move this one on the right side, as I would like to show you first of all the theoretical part of a falling wedge. Well, a falling wedge goes like this. You have 5 different legs, all of them corrective, and goes with 1, 2, 3, 4, and 5, and then of course price breaks higher. Any falling wedge travels within the 1 and 3 and 2 to 4 trend line, so this will be the 1 and 3 trend line. Let's make it eventually a bit bigger for the purpose of illustrating here. And this would be the 2 to 4 trend line. And by the time the 2 to 4 trend line is broken, that is the moment where we should go long, or in this case we should go and buy call options, with the expiration date being in line with the time frame the analysis is made. Now this is the daily chart, so obviously it makes no point or no sense to buy call options on the 5-minute chart with 5-minute expiration if the time frame is such a big one when the wedge is forming. And first of all, and second of all, the 2 to 4 trend line is not broken. Our wedge, I would say, started from the moment of time that this support here broken. So the wedge started either from those highs, or from those highs. I would say that from this moment of time. So from this moment of time we have what? The wedge goes like this. 1, and the second wave, the third wave, the fourth, and the fifth, to be done around here, around this level. So we are now in what? 73.25. We still have some economic news out of UK. Tomorrow we'll have the GDP. Today Governor Carney is going to speak as well in front of a bank committee. So it is still possibility for the market to make a new low for the wedge. But anyways, around these levels I would say that the wedge is going to be completed. What's the most important trend line in a wedge, regardless that it is a rising wedge or a falling wedge? Well, the most important trend line is the 2 to 4 trend line. By the time the 2 to 4 trend line is broken, we can consider the wedge being completed, and we should go and trade, of course, call options. Now, the trend line may be broken, the 2 to 4 trend line may be broken in here, but then the market to reverse a bit to the downside. We will try to avoid this one by the moment, or sticking to the area where the first wave ended, in here. And that means 73.98, even though the market is now here 73.40, doesn't really matter. So what I would like to do with this option here, and mark my words, this is an option that needs a bigger expiration date. We are at the end of February on Wednesday, so we'll not trade, won't trade here, not even end of week expiration date. But I would like to buy call options by the time market breaks the 0.70 level with end of month expiration date. So basically for the end of March, as I don't think it's going to be broken this week. But who knows? 1 month expiration date anyway. So favoring call options with end of month expiration date by the time 0.74 level is broken. Thank you very much for being here. This is binaryoptions.com. Make sure you check our website, you check our Binary Options Academy, as we are starting for this month a very interesting project on how to trade specific currency pairs, focusing on the currency markets first of all, and then extrapolating, if you want, the result to the binary options market as well. Thank you, and bye bye.